U.S. condition ratings continue to be historically high for row crops and spring wheat. U.S. corn is rated 77% good to excellent, down 1% from last week, still 10% above 2017. Ratings improved in the Dakotas but dropped in Iowa and Minnesota. U.S. soybeans were 73% good to excellent, steady for the week, but 7% above 2017. Ratings improved in South Dakota and Nebraska, even with flooding, but were down in the rest of the region. Nationally, spring wheat conditions were down 1%, with the region steady to 5% higher. And the U.S. winter wheat harvest is running ahead of normal, while conditions continue to improve in the region with rain. Back with market analysis this week is Luke Swenson, and we've had a lot of uncertainty overhanging grain and livestock futures trade because of trade. And do you think that's going to change anytime soon here if we don't get an agreement with China?
I don't think so. It's really tough because they got July 6th is the day they're supposed to be coming online. China's been saying they're going to retaliate, but they've kind of been hesitating back on it. We've got everyone kind of guessing one way or another. Are they going to come out just before the 4th of July and try and, throw the last nail in the coffin to push this thing down and make a bottom on it? But it's anyone's guess at the moment. Trying to sustain it with anything other than a weather rally, say mid-July, is going to be tough until we get that sorted out. It's just, there's too much overhang on it. The funds are selling. There's too much pessimism in the market that until we get a little resolution or thinking we're heading somewhere with that to start really sustaining a rally unless weather really kicks off into July.
And funds have already started pushing short in good portions of the grain complex. So do they keep doing that?
Yes, the early ones were out way before the trade stuff really kicked off, and you're seeing everyone kind of trail in, and they're starting to build a short position on it. Is it going to persist? Yes, unless we actually, like I said, start to see that weather, say in the 10th of July area, those forecasts start to carry out a little farther into, say, the 15th or so. Then you'll start to see some premium get built back in. For the most part, everything weather premium has been taken out. Mm-hmm. But when you do look at, say, the options values and things moving around in that market, you can see there is some value in there, that there's kind of a little bit of optimism up close that they're going to work through this thing and they'll get us a little bit back in line with where we've been.
With all the volatility in both grain and livestock markets, how do you do risk management?
Right now, we're telling everyone for the most part, do the sit on your hands approach. We're kind of hedged where we want to be, close to half on corn and beans. Wheat, we're a little under hedged, but with where we're sitting and your risk reward looking at the scenario with China, it's not really worth scrambling to do a bunch here. If you're sitting on old crop and you need to move some, we'd definitely be saying watch basis, because we've had guys in central North Dakota contracting old crop corn 20 cents under, if not a little better in spots. So look for those niche areas, take that when you can get it, but keep the futures open, let them work.
Thanks so much, Luke Swenson, joining us. And for our extended conversation, you can go to agweek.com.